Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The messy international outlook continues, but so far the changes have been more in prospect than real. First, however, this will be a big week of data and policy releases. Not only will Australia review its policy rate tomorrow, a 25 basis point cut is anticipated, taking their cash rate target to 4.10%. Our own RBNZ has its first monetary policy review of 2025 and is widely expected to deliver a 50 basis point cut to 3.75%. China also reviews its rates this week on Thursday, but no changes expected from them. On Wednesday, there's another full dairy auction. And Canada and Japan will release January CPI data, and there will be many January PMI releases this week. And data out over the weekend from China, banks lent a record 5.2 trillion yuan in new loans in January, far above the 990 billion yuan in December, and easily beating the forecast of 800 billion. It is a spectacular show of support by banks for the push by Beijing to juice up its economy via more debt. Foreign direct investment in China has plunged almost 99% over the past 3 years, Chinese government data shows, as their economic slowdown and concerns about their everything is national security approach drove investors away. China only recorded a net inflow in 2024 of $4.5 billion, and that is their lowest in more than 30 years. In 2 of the 4 quarters of 2024, there was in fact a net outflow. Up from 1.8% in 2023, Singapore's economy grew 4.4% in 2024 on the back of stronger than expected rebounds in both exports and tourism. This was an upward revision from the preliminary 4% rate reported by them earlier. By itself, Singapore's fourth quarter rose at a 5% rate. But Malaysia downgraded its growth in the fourth quarter of 2024 to 5% from a year ago. This was due to weaker progress in the fourth quarter than the third quarter. In the US, retail sales were 4.2% higher in January than a year ago, a slightly slower pace than December's 4.4%. This official data backs up the Red Book survey we report weekly. But we should note that the good January data came despite a sharpish fall-off in car sales in the month. That fall-off contributed to a seasonally adjusted retreat in January from December, and one that was notably more than expected. Business inventory data out for December in the US actually shows lower levels, and their inventory-to-sales ratio improved unexpectedly. This shift might be due to public policy uncertainty around tariffs. With inventories lower than expected, it therefore won't be a surprise to know that US industrial production in January rose on a year-on-year basis, and by more than expected. But the January rise from December wasn't as strong, but at least it was a rise. And it is President's Day in the US on Monday, that's tomorrow New Zealand time, a federal holiday, but only inconsistently observed by business and many states. Across the border, Canada said its manufacturing sales rose, and for a third consecutive month in December. And Canada also released its fourth quarter senior loan officer survey, which revealed a sharpish tightening in credit conditions for the period. The US Treasury 10-year yield is now at 4.48%, unchanged from Saturday at this time. And the price of gold will start today at just under $2,882 an ounce, down $6 from Saturday. And oil prices are down 50 US cents at just over $70.50 a barrel in the US, while the international Brent price is just under $75 a barrel. And the Kiwi dollar is now at 57.4 US cents and unchanged from Saturday. Against the Aussie, we're also unchanged at 90.2 Australian cents. Against the euro, we're still at 54.6 euro cents. That all means our trade-weighted index starts today at just under 67.3, unchanged from Saturday, but it's highest since Christmas Eve. And the Bitcoin price starts today at $97,094 and down 1.6% from Saturday. Volatility over the past 24 hours has been low, at plus or minus 0.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.